Now, if you're an avid watcher of Startup Central, you would have noticed one trend, and that is Team Startup Central stays away from funding news. Very rarely do we get founders to come here and talk about the checks that they've received, because let's face it, in 2020 and 2021, it was a done thing. How many startups could we actually feature who were getting checks? But now that there is a winter of as far as fundraising goes, getting big checks is no longer the norm. In fact, it's quite hard. And if you're going to get a check from an investor, the buzz is you should be almost EBITDA positive, if not already in the green. Cash burn should be at the minimum. With that, I'd like to now introduce my next guest, co-founder of FlexiLoans. It's a fintech which specializes in lending to SMEs as well as MSMEs. The marquee investors that will be joining the cap table, founded by someone who used to earlier work at Inam. With that, I'd like to invite my next guest, Deepak, who's joining us right here on Startup Central. Congratulations, Deepak. There's a winter, and you've got a check of $90 million. I can't remember the last time when we, heard about a fintech getting such a large sum of money. There was no winter for FlexiLoans. It's summer, monsoon through the year for you, at least for now.
So thanks, Nayantara, for having us on the show. See, the winter for fintechs or the lenders started in ILFS, when the ILFS crisis happened. So that's where all of us went back to the table and, made a lot of tweaks in our business models and ensured that the fundamentals are super strong. All of those fundamentals allowed us to grow at a great pace when COVID happened, because we were digital ready already, ready to grow in an asset-light model through a platform approach. And we delivered some great numbers in the last 2 years. Now, obviously, if you're delivering great numbers, as you said at the start of your show, there is no winter, because then the investors are chasing you when you want to raise the funds. That happened to us, and we were fortunate to raise the funds at the right point in time and look forward for the next phase of growth now.
So are you already EBITDA positive? I'm asking this question because I was, when I have offline conversations with VCs, what they tell me is that if today a startup is not already EBITDA positive, forget it.
So we are EBITDA positive, but EBITDA for us, honestly, because we are a lending organization, interest cost has to be included. So we are pre-provision profitable. That's a term very, very commonly used in startups. And burn for us, from the beginning have been very, very low. So we are amongst very few startups, where the cash flows were always much more than the burn numbers, and the burn was always towards investments. Over the years, the operating leverage is clearly visible in the way we have grown, and our numbers have always, kept improving as far as the operating leverage is concerned, and we should be hitting the profitability numbers also pretty soon.
But then tell me something. What is FlexiLoans USP? You're trying to do something which large NBFCs are already doing, large banks should be doing, and have started to do again as we see credit of growth come back in the financial system. So why should an SME, MSME, or anybody come to FlexiLoan for a loan?
So very good question. That's the question we asked to ourselves when we started this company 5-6 years back. The MSME market, if you look at the MSME market in India, the micro MSMEs, which are sub 10 lakhs, is a very, very unserved and underserved market, Nayantara. It's so unserved that when I met some CEOs of the bank, and asked them for a business loan product, they didn't have a business loan product below 10 lakh rupees. Most of them called it a personal loan. It was not called a business loan. It was that bad. Things are changing significantly, and the market dynamics is also improving significantly, because a lot of MSMEs are now coming digital, right? Thanks to Geo, thanks to the UPI rails and the digital footprints, a lot of MSMEs are coming digital, and thus the market is expanding at a great pace. Now, on your first question on what are the key modes for FlexiLoan. So we are a very a private token, I would call, a very, very curated token-like platform where we are embedded into almost 50 plus ecosystems on one side and almost 10 plus lenders on the other. And the way it functions is, the moment an ecosystem plug into FlexiLoans platform, they get access to not only our balance sheet, but the balance sheet of our 8 to 10 lenders. And this includes larger NBFCs, this includes a few banks, etc. as well. The end-to-end customer experience is controlled by us. And we co-create underwriting models, with these larger NBFCs and banks to ensure that all their requirements of checks are done on the platform itself, and the platform helps them take those decisions in real-time basis. So that's our first and largest USP. The second is, we are one of the most visited websites in SME fintech space in India. We get roughly million hits on our website every year, more than 1 million hits on our website every year. And because we are so well diversified, we do loans in 1,600 cities with a single office in Mumbai. So again, the big USP is that a very, very clear niche in the way we acquire these MSMEs from tier 2, tier 3 down. Corroborating this with numbers, 50% of the loans we do are in tier 2, tier 3 towns. 50% of the loans we do are first-time business loan borrowers. So ecosystem lending, a very, very strong co-lending platform, a very strong, technology platform which allows MSMEs to apply digitally loans to us and get it fully served digitally are three large USPs.
Right.
And fourth, which is a very, very important USP, which is very critical for every lender and which defines the fabric of FlexiLoans over the last 6 years, is our underwriting models. Our understanding of the MSME segment which we operate in has developed over the last 6 years in manifold ways. We have collated so much data and created models which allows us to score good customers and bad customers, and it's reflected in our credit costs. So if you look at our credit costs, consistently have been below 4% for last 2 years, which is one of the best numbers in the industry given by any fintech. So these four are the key USPs for FlexiLoans.
But the cost of funds is going up. It has gone up since the 4th of May when we saw the surprise rate hike by the Reserve Bank of India. You and I are chatting before the scheduled June meeting of the Monetary Policy Committee. So rates, in all probability, will go up. We don't know whether it'll be 25 bips or 50 bips. Markets hope is nothing more than 50 bips for now. So cost of funds will go up. What will that do for your competition with large NBFCs as well as banks?
Yeah. So the good part for our customer segment is, given these are extremely well spread, our average ticket sizes are 4 lakh rupees. We do more than 1,000 to 2,000 loans every month. So when you're doing so many number of loans, your ability to price is much better than when you're doing wholesale lending. So in retail lending, the ability to price it is fairly there. So our ability to pass that interest cost hikes, if any, to our customers will be very much there. The second point is, with this equity coming in, we expect our cost of borrowings actually to go down versus to go up, because we've been fairly borrowing despite whatever the rates were. We were borrowing at slightly expensive rates than where the larger NBFCs borrow. So with this capital coming in, our cost of funds are expected to go down, and we also have a very large committed debt along with this round, which we have announced, right? So there's a $60 million committed debt which we have, and we'll be using that as we scale the platform going forward.
Okay. Now, you had Sanjay Nayar, the big boss at KKR, who's also now set up a fund to back Indian entrepreneurs and startups. He's been early on with the FlexiLoan journey. He's already at a cap table. He's double downing. Other marquee investors are also joining the cap table. My first question to you is, Deepak, and try to be candid, try to be honest over here. You revealed that you're EBITDA positive. Did you want to raise more funds and you had to settle for a lower amount? Did you have to settle for a lower valuation as well?
So if I'll be candid, say that you're saying you're selling yourself too much on this platform. Believe us when I say this. We had more check than we wanted to raise in this round. We actually said no to more money because this is what we required for next 12 to 18 months of growth, and we said that's enough as per the current plans we have, and we took what we wanted. In fact, we went and offered some secondary to our existing shareholders, and at these valuations, nobody wanted to go out. So they were very clear that in the years to come by, FlexiLoans has a great future, and they would want to continue with the journey. So that answers your second question. And third, on valuations, Nayantara, again, this was one of the best outcomes we were hoping for. So there was absolutely no compromise on that. I'm super candid on that.
So the winter, you think, is only going to be for 12 to 18 months? Gaurav Munjal of Unacademy wrote to all employees saying the winter could last for as long as 24 months with no funding. Or you think that doesn't exist for fintechs like yourselves? And one more thing, if cost of funds are going up and the easy money era is winding down, why didn't you say yes to the more checks that you were getting?
See, again, as a lender, and a platform, you balance out the amount of funds you raise in terms of debt and equity. We've got a fairly good, robust amount of equity, which we want to deploy in various technology products and platform we want to build. And plus, whatever we want to leverage in terms of our own balance sheet, we already have, that line of sight of those funds with various partnerships. Not only that, as I said at the start of the conversation, that we have a very robust off-balance sheet platform, and what that does is, I have at least a list of 10 lenders already integrated fully with the platform, where we use their balance sheet to deploy the funds to our set of customers. So thus we grow in a very, very asset-light manner, to an extent that 70% of our AUM growth in last year was off balance sheet. So the winter, as you call it, at least we are well prepared for it with the right capital partnerships already, on balance sheet as well as off balance sheet, and hopefully we should be able to grow at the pace we want to. And I personally believe that if you're creating great assets, if you're creating fundamentally a good company, capital will come and back you, because there is ample pool of capital lying there which is looking to invest in great assets. Obviously, investors will be more cautious now when looking at the platforms, but if the platforms are doing good and if the numbers are stacking up well, if the unit economics are stacking up well, I don't see a reason why capital will not be backing great companies.
Okay, so if you're a great company, if you're focusing on the bottom line, if you're not burning cash to onboard customers and have a moat which is working, money should follow you. It's been the big advice of Sanjay Nayar of InfoEdge India, right? Don't chase investors, chase customers. Let the investors chase you. This is exactly what Deepak Jain, formerly with Inam, now following his dreams with FlexiLoans, is reiterating. Thanks so much for being live with us today.
Thank you. Thank you a lot.